Investors follow closely to China's 5-year plan because we know that whenever Beijing sets the direction, money and capital will flow into that direction. So today I'm breaking down 6 Chinese stocks that line up closely with this plan, from AI and chips to EVs and online travel. Let's go. China's 15 5-year plan actually has 12 key focus areas, and that's a lot to cover in this video itself. But luckily for me, I have this research report from CGS International. I'm gonna show you right now. Okay, just go to this Google Drive link. I will share with you later on. Click on the CGS China strategy report, and over here you see that there are 27 pages. Okay, so they've broken down into a lot of details about the 12 focus areas, so which is this one, and how certain criteria, right, has actually shifted up in priority. So this building a modern industrial system is now top priority. Promoting opening up has gone from 9 to 5, so level up in priority. They have also highlighted the specific China stocks under their high conviction list. So you have all these Tencent, Trip.com, CATL, AIA Group and stuff like that. So if you are interested in downloading this report, I have actually put down this link in the description box below. You can just click on it, sign up as a free member of my newsletter, and then you can find a link for you to click and get this Google Drive. So on top of getting the 5-year economic blueprint, you can also get access to other research reports, like for example this one, the Fishers Investments Definitive Guide to Retirement Income, and all the EQDP research reports. That being said, okay, 12 key focus areas are too many to cover, so I've narrowed down into 4 big ideas I like about China's plan. So number 1 is building a modern high-tech industrial system. Second one is achieving tech self-reliance, be it chips, AI, infrastructure, stuff like that. Boost domestic demand, especially the services and consumption. And number 4 is to double down on green transformation. All the stocks we are going through today are plugged directly into these themes. Now let's jump into the stocks right now. But before that, if you're interested in US, China or Singapore stocks, then you should join our free weekly newsletter with over 9,000 plus subscribers. Just click on the link down below to join our community today. With that, let's get back to the video. First up, we have Pony AI. Not the My Little Pony, but this is a leading autonomous driving play out of China right now. Okay, this year they have been on a roll. The company kicked off fully driverless Gen 7 robotaxis across all the top tier cities in China like Guangzhou, Shenzhen and Beijing. So we are not talking about testing phase anymore. These are real commercial rides in major cities. And on top of that, Pony AI and ComfortDelGro also signed an MOU recently to explore autonomous vehicles deployment in international markets in future. So here are 3 quick reasons why I think Pony AI is worth watching. Number 1, early mover scale. So they are not just first to get permits, they are already scaling their fleets. This gives them more real-world driving data than most rivals. This is also what made Tesla so successful, because they got the vehicle with the AI data first mover advantage as compared to the other competitors. Second, strong backing. So Pony AI is well vested or supported by other car makers with names like Toyota, Stellantis and NIO. Last but not least, multiple revenue paths. It may be ride-hailing today and logistics robo trucks tomorrow. So once their software is kind of tested and proven, it's very plug and play across different vehicle types. There's a lot of growth potential for Pony AI, and if the autonomous driving goes mainstream, be it in China or international markets, Pony AI is one of the names that can benefit great. Next up, we have Yixiaogo, listed as EHGO. They used to be seen as a traditional office solutions provider, think printers, hardware, after sales, but 2025 has been a pivotal year. They officially launched the enterprise-grade AI Enlighten series. Think of it as a desktop-sized AI server that sits inside the office and gives you private on-premise AI for all these knowledge management, contracts, HR, finance, and more. Okay, so instead of SMEs worrying about sending data to the public cloud, they can just buy a box from Yixiaogo, plug it in, and get secure AI functions right on their own network. Why am I watching this small cap? Three quick things. First of all, the real product is already shipping now. Okay, the Enlightened devices are commercial, sold through their official online mall and targeted at China's massive SME base that is still under digitalized. Second, installed base monetization. So they already run a nationwide service network and after sales system in China. If they can upgrade existing office customers to all these AI devices and software subscriptions, that will become recurring revenue instead of a one-off printer sales. Number 3, a fresh overseas angle, because recently their US subsidiary signed a strategic partnership to distribute Maxsun PCs hardware in the United States. This marks their first official entry into the US IT hardware sector, okay, or the market itself, and gives them cross-selling opportunities. In short, Ishaogo is an interesting picks and shovels play on China's office AI adoption. Now, if China wants tech self-reliance, you cannot avoid SMIC, Semiconductor Manufacturing International Corp. So they are the most advanced foundry in China that's actually mass producing 7nm chips despite all these ongoing tech challenges and the export controls from the US. And if you look at their financial numbers, it shows that things are already picking up and is on track for around 9 billion USD revenue this year, helped by the surge in the AI related chip demand and state-backed localization. Again, 3 key points that investors should look at. So one of it is the policy tailwinds and second one is the strategic customers. So actually they both come hand in hand because they are effectively the national champion for foundry. The Chinese government has always enforced that local companies like Huawei, Baidu, Alibaba or Tencent, they have to work with SMIC, with the infrastructure and stuff like that. And we are talking about massive industries like China's AI, 5G, 6G and automotive projects. So all these will lead to capacity ramp up. In fact, SMIC is planning to double their 7nm capacity in 2026. Industry reports say that they are targeting around 30,000 wafers per month on that node. So that's huge for AI accelerators and high-end smartphones in the domestic market. Speaking of Alibaba, how can we not include this stock inside the video? It is one of the core platforms in China's digital economy. On the surface, people know them for Taobao, Lazada, AliExpress, but the real long-term story is that they are tapping into Alibaba Cloud and the broader data infrastructure. 3 big reasons to like about Alibaba Group. Okay, so first of all, market dominance. Alibaba is still the heavyweight in China's e-commerce scene and Alibaba remains the largest cloud provider in the country. Competition is always stiff in China, we all know, but at least Alibaba is operating from a position of strength. The second big reason is structural turnaround. So 2024-2025 has been a reset period for Alibaba. So they have reorganized their business units, trimmed the fat and double down on their profitable or long-term segments. So with the aggressive share buybacks and even paying of dividends, the management is signaling confidence in their long-term direction. Third, which is national alignment. So many years after the Jack Ma's incident, Alibaba Group is now deeply aligned with China's focus, their direction and push for a digital-first economy. So Alibaba's platforms support millions of SMEs and their cloud plus AI products are critical infrastructure for businesses in China. So overall, as long as China continues to upgrade themselves digitally, Alibaba will directly benefit from this as well. Moving on to Trip.com. This is your pure play on China and Asia travel, serving over 400 million users. In fact, this one fits perfectly under Chinese push to expand their domestic demand. It is actually attracting more foreign spending in China itself when their own local domestic consumption is languishing. What surprised me is that inbound travel into China has doubled on a year-to-year basis. So Trip.com is actually benefiting from both outbound travel and also inbound travel. And 3 key strengths of this company. First of all is consumer confidence. So travel demand is already very stable. Everyone, Gen Z, they like to YOLO, they like to travel. It's stable and growing fast as well. So Trip.com is right in the center of this circular growth trend, which is not likely to dissipate anytime soon. Second, they have this AI-driven platform. They're not just a booking website anymore. They're using AI to personalize your itineraries, optimize search results, upsell upsell hotels and experiences. Sounds like Airbnb. And third, international growth. This part is actually quite underrated because they're expanding aggressively into Southeast Asia and Europe. In fact, in Singapore, I already see a lot of their banners, their advertisements, they are like fighting toe to toe with other providers, and they are actually gaining market share. So the growth story here is no longer just China itself reopening, but is global diversification for this company itself. Now for the green transformation pillar, we have BYD. They are already the world's largest EV maker by volume, outbidding Tesla. But the interesting part now is how fast the overseas story is growing. Okay, so honestly, BYD is like China's most future-proof industry giant, because first of all, they have already demonstrated that they can surpass Tesla in the total unit sales, dominating both pure EVs and hybrids, okay, which gives them a massive volume advantage. So if you look at their massive factories in China itself, wow, you'll be blown away. And that scale matters because it brings down the cost and strengthens their global footprint. In fact, I've heard of stories that BYD is moving into robotics as well and doing a lot more things other than just EVs. So this is actually BYD's secret weapon in the vertical integration. So they produce almost everything in-house, starting from their batteries, which they are very good at in the past, motors, and even now their own chips. So all these will lead to lower production costs and better control over the supply chains. They are also able to innovate faster as compared to competitors. You rely on your suppliers and you cannot do a lot of things. And the third part is about the policy alignment with China's shift towards green transformation as well. So BYD is definitely benefiting from the clean energy incentives, the export support, even local government procurement programs. So there we have it, the 4 focus areas that I like about China's next 5-year plan. So first of all, smart infrastructure, where we have Pony AI and eShellGo. This is the backbone of China's modernization push, be it autonomous mobility, enterprise AI, and digital office transformation. Second, we have tech self-reliance led by SMIC and Alibaba Group. So this pillar is all about chips, cloud, and AI power. And third, domestic demand, represented by Trip.com. Travel services consumption are the major policy priorities here. Number 4, the last part is clean energy, anchored by BYD, structural long-term theme that aligns perfectly with the country's sustainability goals. With that, I've covered 6 stocks which stand to benefit from China's policy tailwinds. But I also want to hear from you. What is your China pick for 2026? Let me know in the comments down below. And if you find this video helpful, don't forget to like, subscribe, and hit the bell for more investing insights. Thanks for watching, and I will see you in the next video. Bye bye.